Welcome back. Well, Jim Wiesemeyer joining us now. Jim, we heard that the White House last week encouraging Congress to pass a massive food aid bill, but in that would be some incentive for U.S. farmers to double crop, potentially double cropping with wheat and encouraging more grain production here. I know you talked to a lot of folks. At the end of the day, would a move like that really incentivize that much more production here?
It would not. It was an odd proposal that more than likely came outside of the U.S. Department of Agriculture. I cannot imagine ag economists at USDA proposing what they did, which was basically a dramatic increase in loan rates that have to be repaid, basically. So that doesn't do anything. And on the double cropping, they're really targeting 2023. When you talk to White House people, they're more than worried about 2023, getting the plantings there. But on double cropping, they didn't even include sorghum or milo, and that's a double crop too. So, bottom line, Tyne, that does nothing to incite, because why would you take even out an 868 soybean loan when price on $16 or above? I mean, it just doesn't pass the laugh test.
Yeah, well, there's a lot that can happen between now and 2023. And Dan, we saw some moisture recently come into parts of the plains, Kansas getting some rain finally, seeing that moisture that's really a mixed bag for areas of North Dakota. So that moisture, a blessing, but also a hindrance in some areas when it comes to planting. Do you think that already Mother Nature is creating some major hurdles when it comes to crop production? Or are you not going to that extent just yet?
Well, we would like her to be kinder than she has looking at Mother's Day here, because for our friends in the Red River Valley, that flooding up there is not what they really needed. And more, if we get beyond May 20th, farmers there will be looking at prevent plant. And so with high input costs and a high revenue bar, that looks to be a viable program economically for those farmers. And that's not what we need. We need to feed the world, and that program would not allow that to happen. In the southern plains, the rains came probably too late to have a meaningful impact. It may stabilize yields, but it's surely not going to be adding a lot of bushels in Texas, Oklahoma, and Kansas.
Well, considering these commodity prices, Dan, at this point, are we hurting demand? Are we seeing demand destruction take place?
Well, that's the really interesting thing, Tyne, that I've seen. I've now been doing this almost as long as Jim, 42 years. But as you look at it, my crush facilities in soybeans are now making about $2.70 in the cash market. Ethanol is about 85 cents profitability. So even though I've got $8 corn, $17 soybeans, there's no indication that margins are slipping. I need to get margins where that are compressed and negative, not where they're looking at these big positive numbers, so that ethanol facilities or crushers sell back supply within the market. Not happening. And so the job of a soybean crusher and ethanol plant is to keep bidding bushels, keep those plants running. And that's what we'll see heading to the end of the year, unless there's a real change in margin from on both sides.
Some interesting talk this week, Jim, when it comes to China and seeing U.S. Trade Ambassador Catherine Tai talk about the possibility of, will we see some of those tariffs removed? But at the same time, no matter if we see those tariffs removed or not, there are some real shipping concerns when it comes to China, all due to those COVID lockdowns. Do you see this working itself out in the near term?
Not in the near term. In fact, it'll extend some of the logistics problems, and I think Dan would back me up here, well into next year. You don't shut down one of the biggest world ports in Shanghai and elsewhere without having an impact, and they can't find truckers now, etc. It may sound familiar to the U.S. side. So the logistics problems are going to continue longer, and with the major force, being China, as you said.
Yeah, and when we come to some of those roadblocks that we've seen with shipping to China, is it having any impact, Dan, on the meat side?
Well, definitely. If you look at U.S. pork exports, they are down to China about 68%. And so China's abundance of pork domestically and now all these shipping problems have got people backing away and rearing away from importing pork and probably other meats. Beef is still hanging in there for the moment. But I do worry most on the meat side. But even then, when you look at soybeans or corn, there is going to be a drag on demand. But when you step back and look at unshipped and sold bushels, both in old and new crop position, they are record large. So I'm really upbeat for soybeans in particular. The size of the export program will be happening from late summer, probably into the beginning of 2023.
All right, Dan, Jim, thank you so much for joining us this weekend. Let's take a quick break, and then we'll have a lot more right here on U.S. Farm Report this weekend.